Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market update. This week, the dollar weakened broadly against the euro and yen, slipping toward the key pivot at 99.29. Softer than expected ADP employment data and uncertainty around the US government shutdown pushed the index to its lowest level in nearly a week. ADP estimates showed US private employers cutting over 11,000 jobs in October, raising fresh concerns about a cooling labour market. Unless buyers can hold the 99 support zone, the dollar may face further downside. WTI crude traded near $58.5, down more than 4%. Prices had climbed earlier on US sanctions against Russia's Lukoil and optimism that the US government shutdown may soon end. But persistent concerns about oversupply kept gains in check. Sanctions on Lukoil's European operations have raised fears about winter fuel shortages across several EU nations, with Bulgaria warning its gasoline reserves may last only a month. Markets are now weighing geopolitical risks against supply-demand fundamentals, as traders assess the broader impact of sanctions on global crude and refined product flows. Spot gold climbed more than 1.5% in early European trading, touching a 3-week high around $4,195 an ounce. Expectations that the US government shutdown is nearing an end and that incoming data may support a December Fed rate cut helped push the dollar toward 2-week lows, offering steady support for gold. Traders anticipate softer US numbers, which could keep bullish sentiment alive in both gold and silver. With geopolitical risks still elevated, gold's near-term outlook remains constructive, with buyers likely stepping in on dips. The yen continued to struggle for meaningful support, hovering near its weakest level since February. The Bank of Japan remains cautious about further rate hikes, partly due to Prime Minister Takaichi's pro-stimulus stance. Improved sentiment around a potential US government funding deal has also reduced demand for safe haven assets. Still minutes from the BOJ's October meeting suggest a possible rate hike in December, and speculation about FX intervention is limiting aggressive yen selling. Euro extended its recent recovery on Wednesday, gradually climbing after consolidating around the 1.158 region. Weak German economic sentiment data had little market impact. The next key catalyst will be remarks from ECB President Christine Lagarde, which could offer clues on the bank's upcoming policy stance. While steady risk sentiment and rate cut expectations provide short-term support for the euro, traders should remain mindful of potential headline risks as the pair approaches higher resistance levels.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.